Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by 𝗖𝗵𝗽𝗀 Sun Life Mutual Fund and Value Research. Now, for past few years, market has been rising steadily, but many believe that it's poised for correction now. So, is this the right time to invest in, to consider value funds? We'll discuss that and more with Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
So for investors new to this category, can you please explain what value funds are and how do they operate?
To understand value fund, you need to understand what is value investing. Value investing is a framework or is a style of investing whereby the fund manager, the investor tries to spot an opportunity, spot a company which is selling for lower than its intrinsic value. There are different ways of calculating intrinsic value. That the worth of this company is 100 rupee and it is available for 95 rupee, and that is why he buys it. Whereas the other style, which is dominant in the market or dominant in the mutual fund universe, is the growth style, whereby you buy a company which is reasonably priced. And you are buying because the company will grow and the price will rise simply because you are banking on the growth. Here is where it might be a growth company too, but it must sell for little lower than its worth so that it has an upside, which means that the value fund manager and this value fund manager is investing only in those companies. He's following a value style of investing. Now what happens as a result of this is that these portfolios, when I compare them with the flexi cap fund, which is dominantly growth, or multi-cap fund, you find that the value funds are relatively cheaper. Looking based on the weighted average PE ratio of top 10 funds, they are in the 20s, whereas the multi-cap funds are in mid 30s and higher 40s. This is the kind. So the end result is that their endeavor is to buy stocks cheaper and bank on that growth on the turnaround.
Okay, tell me one thing, why is a company available at discount? Is it because it's out of favor, that particular style or theme is out of favor, or is there any other reason behind it? If it's a good company, why is it available at a discount?
Stock market is a crazy place. Every time a stock is bought, there is a person who is also selling it. Yeah. And setting the price on a day-to-day basis is a very weird exercise. But eventually the sum total is more buyers willing to bid up the price, or more sellers willing to sell at lower price that actually drives up or drags down the price. Now comes why some stock are available at far lower than their intrinsic value. One is that there is no formula for intrinsic value. It is almost like I look at the positive side of the business and I look at the negative side of the business. And I believe in the positive side more. And some majority of the market is looking at the negative side more. Okay. So it will be dragged down on the valuation. To succeed with a value fund, one is that you should have a mechanism of estimating the intrinsic value which should be reasonable, which you are able to value that, okay, here is a company which is valued at 50,000 crore. But its real value should be nothing less than 80,000 crore for these reasons, because it has this much of cash flow, it takes this much to set up this plant, machinery, replacement value. You can put any kind of formula around it. So for a value manager to succeed, he needs to do this estimation and he needs to be right as well. Right. You can do this estimation, and if you're wrong, then you are actually paying a price for something which may not be worth that much.
All right. So what is it about the current market conditions that make value funds particularly exciting to invest in?
Value funds are never exciting. It's like buying a reasonably priced thing. So the downside risk comes down, and anyway, the different segments of the market are very cyclical. We have seen this relentless growth of the market, which is led by growth companies which are growing faster, they commanding a price. And markets are always cyclical. So we find that many a times after prolonged period of growth style doing well, value gets back in favor. Companies which are ignored, companies which were relatively cheaper, they get at least on a market fall, they don't crumble. They fall less. So you benefit on two fronts. One is that they rise little more steadily. If you are able to spot it at the opportune time, then you buy it very cheap, and then they fall less. So value might be in or poised for a favorable term in the coming times.
Okay. Now, what are the key metrics or indicators that one should consider, one should look at when deciding on a value fund?
When choosing a value fund, just go to Value Search online, that stock page, and see that it is genuinely value. Because many funds are claiming to be value, but they are not value. This is a very difficult style to follow. And it requires patience, it requires management support, because for a prolonged period of time, you have to do poorly. You may not do well. So one has to see that, it has proven credentials. Just looking at the portfolio, you can't invest in a fund. Then what has been the track record of spotting value and riding it? And it will get proven in one full market cycle, one declining phase and one rising phase of the market. I think, the top quartile in this category have been able to prove themselves well.
So in a mutual fund portfolio, when you say that, no more than 3 or 4 funds are required in a portfolio, where does a value fund find a place there? And how much of portion should be allocated to a value fund?
Value fund has a definite role in everybody's portfolio. Now it depends that, how sizable is your portfolio and what is your orientation. I would say that at the least, any investor's portfolio which is equal to something like 5 years of your savings. If you have done this much of savings, at least 25% to 35% of your investment should be in value fund. Simply because, growth will do well. And growth with diversification, one should bank on, and that is the whole India story all about. But at the same time, being conscious of the value, being conscious of the price, not getting in the extreme end of the, not getting excited about just the price at, growth at any price will really disappoint you on occasion. And to balance it out, you must have value. And there are credible value fund managers who have a demonstrated history of generating, superior return over a full market cycle, which matches with growth.
So like we began with, if the market goes into a correction mode, value fund will come in handy. Yeah. What's the role that a value fund plays when market tanks?
In a kind of market we have been for the last 2-3 years, if the market falls, the ones which have gone up the sharpest, they will fall. Value funds constituents, the value stocks, they are expected to fall less because they haven't grown as much. The other is that they are reasonably priced. The value fund manager is never getting after the fancied component of the market, that buy at any price, growth at any price, because that is where the disappointment comes.
Alright, well, that's all about the value funds. Now we have a viewer's question wherein G. Prasad asks, what is a better choice as a source fund for STP, debt fund or some conservative hybrid fund?
I would say that, when you are doing an STP, the idea is not to maximize the return on the money which is deployed for the short run, because the STP is meant, the investment for the STP, the principal in a debt fund or a conservative hybrid fund, is expected to just earn something. Your money is working while it is awaiting deployment in the equity market, and you're going to assume all the equity market risk. So, principally, it doesn't matter. I would say that one should go for a short-term debt fund if you're doing it for a brief period of time. Why, just to automate the whole process. Overall, I think that, if you invest in a short-term debt fund or a conservative hybrid fund, it will not make hell of a difference to your overall returns, because the money is going to get invested in equity anyway.
Alright then, well, that's all we have for you in this episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.